What if $100 could start paying you every month? Most people think investing takes thousands, so they never begin. Here's the truth. With a simple monthly dividend strategy, a single hundred can be the first brick in a machine that pays you again and again. No day trading. No complicated jargon. Just smart ownership that sends cash back to you while you live your life. In the next minutes, I'll show how monthly dividend investments work, how to start with $100, and how to turn tiny checks into growing income. Ready to make your money work for you, 1 month at a time. Paycheck in, bills out, rent, gas, groceries, gone. Investing sounds risky and confusing, easy to postpone. Here's the simple path. Own assets that pay monthly, no day trading, just steady cash flow while life happens. So how does someone with no investing experience and only $100 begin? Step 1 is opening a brokerage account. This is like a bank account for investing. You can use Fidelity, Charles Schwab, Vanguard, Robinhood, Webull. It does not matter which, as long as it allows you to buy stocks and ETFs with no fees. It is free to open, and most allow you to buy fractional shares, which means you do not need to buy a full stock. You can start with $5 or $10 or $100. Step 2 is choosing what to invest in. This is where most people get lost because they hear about risky stocks, crypto, day trading, options, and it feels impossible. But the strategy here is simple. Focus on dividend-paying assets, especially ones that pay monthly. The easiest way to do that is through something called an ETF, Exchange Traded Fund. An ETF is like a basket of companies. When you buy one share of an ETF, you own a small piece of every company inside it. Some ETFs are built specifically to collect dividends from dozens of companies and pay them to you every single month. Let's look at a real example. JEPI from JP Morgan, popular for steady dividends. Recently it's paid around 7 to 9% per year. Think of that yearly yield as monthly deposits. With $100 invested, that's roughly 60 to 70 cents per month. With $1,000, about $6 to $7 monthly. With $10,000, around $60 to $70 each month. It's not life-changing at first, but it's real cash flow that arrives while you live your life. And remember, dividend yields can change and are never guaranteed. Another example is a company called Realty Income, ticker symbol O. It is literally known as the monthly dividend company. They own thousands of commercial properties like Walgreens, Dollar Tree, gyms, and they collect rent, then pay investors a dividend every month. They have paid dividends for over 600 months straight. Real numbers. Monthly income at 8%, at $100 invested, about 66 cents per month, at $1,000, roughly $6 to $7, at $5,000, around $33, at $15,000, about $100 per month, at $75,000, near $500, and at $150,000 invested, about $1,000 every month. That is the latter, same 8% yearly, paid monthly. These are simple illustrations, not guarantees. Yields change. Start small, $100 at a time, at an illustrative 8% a year. That might be 60 to 70 cents next month. Not guaranteed. Yields change. That tiny dividend buys a sliver more, so the next month's payout is slightly higher. Turn on, DRIP, dividends auto buy more shares. Add a small recurring buy. $25 each payday. Set it once. Let it run. Those new shares pay dividends too, next month and the month after. That's compounding. Picture a simple timeline. Month 1, month 3, month 6, month 12. Share count creeps up, payouts inch higher. Ignore day-to-day price noise. Keep adding consistently. Review quarterly, not daily. Focus on shares owned and the income trend, not every wiggle on the chart. Consistency beats perfect timing. Small deposits, reinvested, snowball into real monthly income over time. Reinvest, repeat. This is where someone might say, but that sounds slow and boring. But what is really slow and boring is working 40 years, retiring at 65, and hoping you saved enough to not run out of money before you die. This is not about waiting decades. This is about building a money system that keeps growing month after month. Think about it like planting fruit trees. The first year, you do not get fruit. You plant, you water. But the second year, you get a little, then more. Then one day you have an orchard that feeds you forever. Dividends work the same way, and you do not need land. You only need discipline and a phone. If this video is helping you understand investing differently, take 1 second to like this so more people can find it. It really helps. Let's map out real numbers. Monthly contributions into dividend assets. Start with $100 per month at about 8%. Here's the progression. After 1 year, you've invested about $1,200 and collected roughly $50 in dividends. At 5 years, about $7,300 invested and earning around $48 per month. By 10 years, roughly $18,000 invested and about $120 per month in income. Now, let's compare with a higher contribution. On the right, $300 per month. After 10 years, that could be about $54,000 invested and roughly $360 per month. Stretch that to 15 years at $300 per month. Roughly $100,000 invested and about $650 monthly, enough to cover a car payment, even rent in some cities. These are simple illustrations. Yields change, amounts vary. The point is consistency. Small, steady deposits, reinvested, can snowball into meaningful monthly income over time. Keep it simple, contribute regularly, focus on monthly payers, and let compounding do the heavy lifting. But here is the wealth fast lane perspective. You do not just invest and wait, you build income on the side. A side hustle, a small business, extra shifts, freelance work. Use that extra income to buy more dividend assets, use dividends to buy more shares, then eventually use dividends to buy more assets like real estate, online businesses, vending machines. Dividends are not the destination, they are the financial ignition switch. And here is something powerful. Most people do not need millions to be free, they just need enough passive income to cover their basic expenses. If someone spends $2,000 per month and they build income from dividends, rental properties, and side income that pay them $2,000 per month, they are financially free. They do not need to wait until 65, they can choose how they spend their time. But first, someone has to begin, and beginning is not complicated. Step 1, open a brokerage account. Step 2, deposit whatever you can, even if it is $10. Step 3, buy a monthly dividend ETF or stock that has a history of stable payments. Step 4, turn on dividend reinvestment. Step 5, keep adding money every time you get paid. Step 6, do not panic when the market drops. Dividends usually keep paying, and when prices drop, reinvested dividends buy more shares at a discount. This is how wealth is built quietly, not with hype, not with luck, but with ownership, owning income-producing assets and letting time do the heavy lifting. So imagine again that person at the kitchen table. They deposit their first $100. A month later, they get their first dividend. Maybe it is only 53 cents. They smile, because it is not about how much it is about what it means. That money came in without them doing anything. And if money can make money once, it can make money again. If this helped, subscribe for more simple investing wins. Comment ETF list for funds to research or first 100 for your roadmap. Thanks for watching. The biggest mistake is waiting until you have more money before you start. The second biggest mistake is never starting at all. Disclaimer. This video is for education only and not financial advice.